please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to this special presentation titled Chronicling an IPO Journey. Our focus is on the infrastructure sector and an imminent listing of one of the premier consultants in this space, Dhruv Consultancy. Today's discussion will feature an all-round perspective from Gaurav Jain, Director, Hem Securities, Prakash Diwan, Fundamental Analyst and Expert in the sector, and PB Dandavate, Chairman and Managing Director, Dhruv Consultancy. Gentlemen, thank you so much for joining us. Let's start with the headline number, the $1.5 trillion investment number projected for the next 10 years. Gaurav, what are going to be the key drivers for this space when you look at that headline number?
I feel like probably the most important thing is the willingness of the government. Like the political will has to be there. That's the most important thing. The financing of the infrastructure sector is the most important thing. We have to relook at that. Probably the convenience of financing to the companies probably who are operating into this particular space. That's another important thing. Land acquisition is an important, again, segment for infra development. And again, environmental clearance, like probably that's one of the most important issues that probably these companies get stuck. So these are the few points like probably that has to be taken into consideration.
Prakash, you're a numbers guy. That was a broad perspective where we look at political will as a catalyst for all these investments, fructifying for a lot of the private sector players. But purely from a numbers perspective, what are going to be the growth drivers?
To be honest, today there's been no credit growth that most of the banks have had. You know, banks are struggling with a lot of NPAs from the past itself. So in terms of additional growth and credit, it's still a questionable thing. And what Gaurav mentioned, financial closure itself is the first stumbling block, and we are still not able to clear that and move to other things. But my sense is that PPP model is probably going to get revisited with a lot of innovation and incentivization by the government, where at least about, it's happened in the road projects. You look at, how we moved from the, EPC model to the HAM, and it started making sense to a lot of people. The same thing is probably going to happen to more complex projects as well. So I think there is a clear direction towards that, and you learn from experience. The government's also learned from experience. Railways has done a lot of changes in terms of that. So it would happen, but the numbers will start stacking up only if that PPP model is actually given much more meat and flesh to it. Yeah.
I think that's an important point you have raised, because I think according to an ASSOCHAM report, about 60% of investments in this sector is sourced from the public sector. But as you mentioned, it gives rise to the opportunity of that PPP model to work. Coming to refining those PPP models, what can consultancies do to help with this? Because as Prakash has mentioned, there's a lot of opportunity, and PPP as a model has had stops and starts. But which is where the role of consultancies become even more important. What do you have to say about that?
If you see last 10-15 years mega projects, many of the projects are time overrun and cost overrun. That has killed the finance, that is basically the banks and the promoters' equity, and project has gone into a toss. The main reason for it is improper land acquisition studies, number one, no 100% clearances in place, number two, and utility shifting. These are the three main reasons which contributes to the delay, which affects then time run, cost overrun, and kills the project. Now, consultant has to play a very, very important role while preparing project reports, that is detailed project reports. If the DPR is well prepared and in advance land acquisitions and all clearances are in place, where the consultant has to play an important role, because government as such, they can only direct, but consultant being a professional in this field, they have to deliver. So now I think this big opportunity in PPP, HAM, or now TOT model is coming up. So all these land acquisition is playing an important role. What I am seeing from my existing or present projects, that resistance to the land acquisition is getting reduced day by day time because of the new land code bill, which gives, I think, 4 times the compensation to the farmers, and they are willingly now giving the lands to the project.
All right. Now, with your IPO imminent, let's get a basic primer of what consultancies do, in the sense of the role of consultancies and how they have evolved as the sector itself sees a lot of transformational development. So, for the benefit of our viewers, tell us, what role do consultancies play now and what have they played in the past?
Before liberalization of economy, the government was doing everything in-house, project preparation and project execution. Now they have started appointing consultants post 1995, I can say specifically once the MSRDC was there, Mumbai. And consultant played a very important role in project preparation in terms of proper drawings, designs, estimation, costing, and proper execution. Preparation of DPRs, that is a major role of consultants. The time overrun, cost overrun should not happen. And government is also now strict enough to see that DPRs are being done properly. So they are keeping retentions. They are also holding consultants responsible if something goes wrong to the project, which previously was not happening. Thirdly, second part of project, that is project supervision, or we call authority engineer works or independent engineer works, wherein team of 8 to 10 professionals is on site, progress and quality monitoring is there, which normal public money or public is more concerned about quality and speed of the projects. So wherein also consultant plays very important role.
All right. Now, Gaurav, for the benefit of an investor, let's put those numbers into perspective, and let's put that, the point about innovative thinking when it comes to delivering solutions for infrastructure in perspective. You've got a 25 lakh crore projection in terms of investment. Out of that, 5 lakh crore is supposed to be pegged for road, rail and port connectivity. So for an investor who's watching this IPO, what is the business opportunity for consultancies in this space?
I feel like probably in case if you try to look at the infrastructure sector per se, like probably it's growing, and like probably as like the promoter of the company says that consultants are playing an important role just to expedite the entire process, just to detail, look into detailings and everything of the entire project, so that like the things are being done on a faster pace. Government has also understood this over probably last decade that yes, this is an important segment, and much thirst is being probably even laid down from the government perspective to have these consultants always. And with the large number of spending in the infrastructure sector, consultants are appointed. So as a from the investors' perspective, so these sort of companies are service-oriented companies, like probably asset light is again an important thing, and these are the operating margins are quite good. So these are the overall perspective that yes, in the rising infrastructure sector, in terms of the consultancy space, like probably this is going to grow at a much faster pace with the spendings in place.
An IPO journey. Let's dive right back into the discussion. Let's now have a detailed look at the resume. The first question which anyone would have would be, what makes Dhruv Consultancy stand out from its peers? So what would you have to say to that?
See, Dhruv started its journey in 2003, and down the line 10 years, we got ourselves qualified and empaneled for medium and mega size projects, number one. Fortunately, that same time, infrastructure boom started. If you see the consultancy business in detail at macro level, it is mainly divided in two parts. The part A is DPR, preparation of projects, wherein the consultants are appointed by public tender processing online, and we got 1,300 kilometers out of 10,000 kilometers, a market share of 13% for preparation of DPRs from 2015, 16 and now 17. And we completed also that. Therein our part gets over. Again, in second part, consultancy business comes. The consultancy is there for supervision of the works. If it is a PPP model, we are termed as an independent engineer. If it is a EPC model, we are termed as a authority engineer. So we are authority there and we are responsible also there. That market is also there. Last year, government allocated 5,000 crores of roads only in Maharashtra and make it double for all over India. To spend 2.4 lakh crore in Maharashtra itself, including port connectivities and coastal roads and all other things. This I am talking only about central schemes. Apart from that, if you see 2 days back state budget, they have also given a top priority to the infrastructure, like in Mumbai, Mumbai-Pune capacity augmentation, that DPR we had prepared. Now there is a provision of 3,800 crore. again, I think Thane Creek Bridge 3, where there is a traffic jam, we had prepared the DPR, and that now converted into a EPC model, and budget is allocated. So a lot of opportunities are there. If you see in terms of inflow or revenues, DPR contributes to 1.5 to 2% of the project cost. As he rightly said, 5 to 7% of the consultancy market. It is divided two parts. First part is DPR preparation. Okay. So it is bound to be there. The start and end of the infrastructure is the consultant. Okay. Then secondly, authority engineer works or supervision works, we get the fees based on the man-months deliverables on site and project speed. So therein 2 to 3% revenues are there. If you see specific number, I can take example of say Bharatmala Pariyojana. The ambitious project of Government of India, they are spending 7 lakh crore rupees for 7 to 8 sectors, that is expressways, coastal roads, border roads, economic corridors, industrial corridors, and all they are inviting large size or large ticket projects, wherein consultants also are needed in large number and large size.
So large iconic projects are not a problem for you in terms of working with other players?
Yes, presently since we started journey and we started brick by brick, as on date we are not getting truly qualified for the iconic projects. Okay. So our plans post IPO in next 2-3 years is to have a joint ventures with the foreign consultancy firms having that expertise and eligibility. So we are bringing in that players along with us. We having a strong local presence and strong manpower and economical deliverables, equipped with foreign consultant having the eligibility, having the capability of and expertise or bringing in the technology. So therein that joint venture should work in next 2-3 years in a nice way. So if you see 7 lakh crores, 5%, the business opportunity in India for next 5 years for the consultancy firms is 35,000 crore.
All right. At this point, Prakash, I want to bring a key challenge which a lot of say viewers might expect in this space, which is that interest rates in the past 2 years had a sort of benign cutting down, and that has helped infrastructure companies reduce funding costs. But when the tide turns, the question which a lot of the people will have would be what happens then? So what's your view on this?
So, one interesting thing that's happened in the last few years, ever since the current government has taken over, is that they've been able to price most of the services and pass on the cost to the consumer, whether it's on tolls, whether it's on other infrastructure that you would use. And remember one thing, that people never mind, people who utilize infrastructure are happy to pay for it, except for you'll have these skirmishes which happen in the Mumbai metro for some fare hikes and all that, but that's more driven by public expectations. But if just to give you an example, there's a very large project between Kargil and Srinagar called the Jozela Tunnel, which might take a few years to complete. It's about 3.5-4 years. The project would cost close to 2,200 crores, but it cuts down travel time from 8 hours to just about 50 minutes. So and strategically, it's a very important thing for the for the country as a whole, for people who travel, for commerce to happen. So there's a huge time saving cost that the economics of time saved is huge when you use infrastructure. So even if interest costs go up and they would get to load on to the eventual cost of a project, there will definitely be avenues to absorb that. So I don't see higher interest costs or a change in the cost structure because of interest rates going up being such a big deterrent. The financial closure would look after that, because end of the day it's on the IRRs that you generate out of the project, and that builds in the higher interest costs as well.
Okay. Now, Gaurav, coming to you, why would a company like Dhruv Consultancy need to come out with an IPO on SME? What is your view on that?
I feel like probably these sort of companies also have to give bank guarantees to the government, like while they are bidding for various projects and everything. That's the most important thing. And like the sector is growing. So that's one of the most important thing, like even from the issue perspective, like this is almost a 23 crores approximately issue, 23 crore 19 lakh is the issue size. So the major, almost more than 50% of the amount goes in the working capital. Then probably they also have to take some loans and everything. So again, repayment of loans are an important thing. General corporate purpose is approximately 4-5 crores. So working capital requirement is an important thing for any company which is growing in a rising sector, like whereby like the business is more. The more capital you have, you can expand fast in terms of human resource, in terms of bidding and everything. So that's the most important thing with like these sort of companies. In case if funds are being given, they can again, like as even the promoter says, that probably they can look forward to tie up with various foreign consultants, like probably bidding for larger projects and everything. So their balance sheet has to be robust. So IPOs give them that financial strength to again look forward for next mile in the business of the company.
All right. And Prakash, you had mentioned about fair valuation. What are some of the parameters folks should be looking at in terms of a fair valuation for the Dhruv Consultancy IPO?
So for any consultancy, one of the key areas to look at is visibility of revenue. Because remember, revenue in this can get lumpy. As they bid for projects, as they win projects, and as the projects flow down, the revenue kind of keeps on accruing. So, people need to be sure that the return on equity is driven by a visible trail of forthcoming revenues. That's one. The second thing is it's an asset light model. And as you mentioned that there's a lot of working capital that comes into play. Yeah, you end up spending a lot before you actually start getting your bills to be realized, and typically the government PSU ownership has its share of woes in that. So how much of utilization, effective capital utilization you are doing on your working capital cycle? In fact, some of the smart companies who have been able to manage working capital cycles to be shortened have done very well on margins, because that's where the margin growth is going to be healthier. So I would look at margins. I would look at return on equity. I wouldn't look at return on assets because it's an asset light model. There's not much of investment in capital assets that the company would need to make. And it's a question of order wins, because end of the day, as the expertise grows for more and more complex projects, for instance, the Golden Quadrilateral, a huge portion in the east is unfinished as yet. And that's the most complex part because of the terrain being slightly more, demanding and challenging. So as you get into those kind of projects, as he mentioned, if you look at the Mumbai Trans Harbour Link, that's probably going to be taking lesser time to execute because it had lesser challenges. The fee structure will also accordingly get readjusted and reset. So you would have to look at the quality, the mix of order wins, not just the quantum of order wins. But I think fairly, the projections will start making a lot of sense, and you just need to make sure you're not overpaying for something which is yet to happen.
All right. And a lesser discussed part of this will be the talent perspective. Do you think that Make in India kind of program will also encourage a lot of talent, a lot of global talent to come and work in India, which at the end of the day helps a consultancy business provide more expertise to its client?
Definitely. If you see the consultancy assignments, the beautiful part of this consultancy business is 80% weightage is given to the technical strength of the company along with the CV or manpower or expertise you are proposing to deploy on the project size. Only 20% weightage is given to the financials. So even if my bid is on higher side financially, I can win that bid with better profitability if my manpower is good. If I am in a position to bring in the foreign expertise, which normally has a higher cost than Indian expertise, but that will pay off in a long run for the country also and for the company also. As far as potential of the Dhruv is concerned, that we have the strong order book of 150 crore plus from the Government of India departments, which are AAA ratings from the financial rating companies, and that projects are to be completed in next 2 years. So that is the present, and future is, as we have discussed, the foreign partner. If you make the joint ventures, then instead of getting 10 projects of 6 crore each, I am planning to have a 60 crore single project, which is an iconic project that will bring in the foreign expertise automatically.
All right. And speaking of the future, Gaurav, wrapping up, what are the pockets of outperformance that you see in this sector for the benefit of our viewers?
I feel logically speaking, like probably as he mentioned that probably they are at 150 crores of order book as of now. So company till December end has clocked a turnover of 33 crores. So look at the growth, that probably 4 to 5 times growth that probably we are looking at in next 2 years time in terms of turnover is concerned. As far as IPO is concerned, we are coming at a pre-money valuation of 7.5 PE multiple. So that's quite attractive in terms of we have left quite a good amount on the table for the investors to make. As far as the sector is concerned, it's quite good. In terms of they're almost ample with most of the government agencies for taking works and everything. That's again an important thing. So overall, attractive valuation, growing sector, good order book is what we are trying to pitch in.
All right. On that note, we'll conclude this special presentation chronicling an IPO journey with an eye on Dhruv Consultancy. I'd like to thank our guests for sharing with us their insights on the topic. And of course, thank you to our viewers for tuning in. Keep watching CNBC TV18.